Where is Australia property prices going?
The market hasn't moved. Some of them are still going backwards. Victorians' population is growing at near record level highs. There's been a lot of pressure on Melbourne and how it's going to perform.
Right now is when they should be experiencing the most capital growth they probably ever will, and it's just not happening. Welcome to the Melbourne Property Podcast. I'm Sky.
And I'm Lindsay.
And we're your hosts and Melbourne property experts. This podcast is your weekly source for insights, data and tips on navigating the ever-changing Melbourne property market.
Whether you're buying an investment property or your dream home, stay tuned for the next 30 minutes as we give you exclusive data and trends that will shape your next property purchase.
And please remember, this information is general in nature and should not be considered financial advice. If you'd like a more personalised conversation, book in a call with the Conversions Buyers Agents team and we'll take it from there. Now let's dive in. Welcome back to today's episode. Super excited to announce that we are moving to weekly episodes here in 2026. So we're recording this one on February the 2nd. So just putting straight announcement. So there's a busy few days coming up in the property market. But today, it's all about a monthly update. So we're going to cover off Melbourne. We're going to talk about where it sits in relative to other capital cities. And we'll unpack that data for you today, and as well as share some on-the-ground insights as well. So keen for this episode.
Me too. I mean, there's been a lot of pressure on Melbourne and how it's going to perform over the last 12 months. So it'll be interesting to see the first month of the year, where it sits compared to other capital cities and regional areas too, and go from there.
And as always, icebreaker. So this one is, we changed it from what it used to be last year. Now it's, what was your biggest win of the week?
Oh, yeah, good one. I think I'm going to steer away from property actually and just talk about school holidays being over finally. Our eldest actually started kindergarten, so he's done a few days of half days and orientations, which super cute, but also logistically really difficult. So I'm glad that they're settled back into kindergarten and daycare, and we can really kickstart the year.
Yeah, nice.
What about you, Sky? What was your biggest win?
I think it's the new office. So for those that have been listening for a while, we're actually starting to grow out our team. We've just hired someone on the ground in Geelong, but we're also moving into a new office. So super excited to get in there. Probably the end of this week that'll be happening. So the plan is to move into the new office, bigger space, brighter space, got a gym and everything in there as well, which we're super excited about too. So I think it'll be the big win for the week.
Yeah, and based in Bentley, so close to home.
Exactly. Yeah.
Very good. Well, do you want to maybe give us a bit of an overview of where this data comes from? So it's the 2nd of February. Cotality have just released their latest report. Can you talk us a little bit about what that is?
Yeah, sure. So we'll probably do these episodes once a month. And so Cotality, they do a monthly, it's the Home Value Index or the HVI report. So they put it out once a month, usually at the start of the following month. Breaks down all the capital cities as well as some of the regions as well, and talks about their kind of median house price growth. So really interesting in terms of monthly growth, quarterly growth, 12-month growth, but it also breaks down the quartiles of the market, which is something we obviously talk about a fair bit, because particularly in the last few years, the lowest quartile of most capital cities has actually been the best performing market. And whereas the top end of the market, not so much, unless you're maybe Adelaide, Brisbane and Perth, and Melbourne in particular, has been a lot slower at that top end. So keen to break down some of that information today.
Yeah, I think that's really important to be mindful of as well. And for those that have been listening for a while, we're very big on there are markets within markets. So at first blush, a lot of this information looks at Greater Melbourne as a whole and doesn't go into that suburb level of detail.
Exactly, yeah. And obviously as a data-driven buyers agency, we do look at a lot of other markets across Australia, if not all. Like we obviously don't look at them all at once, but when they do become interesting, we do buy in other markets. But obviously so much of our time and energy is focused on Melbourne and Victoria at the moment because it is such a great place to buy, particularly because it is in that earlier part of this growth cycle. Not all suburbs, some have grown a bit already and we'll touch on those later. But it's super interesting time still to be talking about the Melbourne property market.
And before we dive in and go through the latest report from Cotality, I thought I might also mention, because it could be useful to some of our listeners, Cotality also have a heat mapping tool that visually displays a lot of this data. So it's called Mapping the Market, and you can look across different markets. You can visually display a whole bunch of different price points, and it's freely available. So you can look at things like the current median house price, the 3-month change in value, also the 12-month change in value, current rent, and that 12-month change in rent as well. So super useful, and I know if you're someone like me who's quite visual, then it makes a lot more sense.
Yep, yeah, definitely. Nice little plug for that platform. It is useful. Like we're obviously some paid ones out there, but for a free one that people want to check out themselves, it's obviously very good.
Definitely.
Good. All right, so let's just maybe talk overview. Where is Australia property prices going, and then we'll plug in to where Melbourne is in that landscape. So over January, the Australian property market was up 0.8%, 0.2%, I guess, better than what we saw in December. It was a bit slower in December, which is also quite seasonal, and we kind of expect that, to be honest. But again, if you look at the big performers, it's Adelaide, Brisbane, Perth, Darwin, again leading the charge in terms of capital growth. Where you have, I guess, the kind of higher end markets or the more luxurious markets you see in places like Melbourne and Sydney, kind of down the bottom end again, which again, we've been seeing this for years now. Melbourne at least is growing again, but we'll touch on where it's growing. But again, you can see here at Sydney at 0.2% growth and Melbourne at 0.1% growth. Nothing to get you excited, but obviously I'm still excited about the Melbourne market, so we can touch on that a little bit later.
So that's their growth over the month of January. So 1 month saw 0.1% growth rise for Melbourne.
Exactly.
So that's put Melbourne at a rise of 5.4% over the last 12 months. That's as a whole.
Yep, exactly. Yeah. So again, 5%, 5.4%, like again, just under the kind of long-term average for property prices in Australia. However, and you mentioned already, markets within markets, the best performing suburbs in Melbourne, which is the ones we were buying in, we're talking more like 21% growth, anywhere from like 13 to 21% growth. So double, triple, almost 4 times what I guess Melbourne as a whole has experienced.
Yeah, and just a few other things I guess we can touch on at the more macro level. So Victorians' population is growing at near record level highs. So it has increased by over 183,000 people in the last 12 months. And that's the biggest jump of any state in Australia. So there's now 5.8 million people living in Melbourne. I actually saw some, social media reports recently that it's going to be the size of New York City by 2050, which sounds huge. But I guess as someone who's previously lived in New York City, it's useful to remember that we're not just one small island of Manhattan here in Melbourne. It is spread out. It's a bigger geographical region that we're covering as well.
Yeah, we're not. Yeah, I don't expect to see all those high rises and the density that you do in New York. But
it does mean though that Melbourne's population will be overtaking Sydney's population much sooner than expected. Yeah. And the big question: where are those people going to be living? Yeah,
exactly. Yeah, and at the moment, that's all on the kind of the far out suburbs and the city fringe. But again, we'll break it down in another episode, I think, because it's
a big driver too. Though has been overseas migration, which we've touched on a little bit throughout the podcast, but in particular areas as well where you're seeing certain demographics and generational families living in same houses. So it'll be interesting to see, particularly that overseas migration, what impacts that's going to have for the property market in Melbourne.
Yeah. All right. So let's get back to the data and talk about where Melbourne sits. So we've spoken about this in previous episodes, but Melbourne is currently the 3rd most affordable capital city. Used to be, I guess, the 2nd most expensive, and now actually 3rd most affordable. So at the moment, you've got places like Sydney, Brisbane, Adelaide, Perth, and Canberra all sitting above Melbourne in terms of median values. And then you have Melbourne, and you obviously have Hobart and Darwin after that. So to most people, whether you live in Australia, whether you're overseas, I think a lot of people would find that quite interesting to hear because most people usually have Melbourne and Sydney alongside each other. So again, just at that high level, obviously things sound affordable, but there's a lot more to it than just, I guess, a median house price number. So I mentioned this a little bit earlier. What we're seeing across the board, and it's reflected in Cotality's report, is that it's the lowest quartile of properties, so the bottom 25% in terms of values that are moving the most. So in January, that lower quartile was up 1.3%, whereas the upper quartiles, the top 25% of properties, only rose 0.3%. So this is kind of the distinction we're trying to make in terms of where to buy and what to buy, both in Melbourne, but again and in other locations. But it's really kind of stark in the data, and it has been for some time. So right now, we're not going out and recommending anyone buy a property in Melbourne for over 1.5 million, which again is kind of that. It's not in the very top quartile, but that's getting up there. And so for us, we're saying, like, we have clients come to us and say, my budget's 1.3 million. I was like, well, that's great. Let's go buy an 800, 900K property because that's where you're going to get the most growth over the next few years. And we know it starts at the bottom and it works its way up. But for now, and again, in the January data, it's still all happening in the lower quartile.
On the flip side, though, if you're an owner-occupier looking to buy your home, now is a good time to buy in that 1.5 million plus because the market hasn't moved. Some of them are still going backwards for January as well. Yeah, and that 0.3% growth in the upper quartile was across Australia. So that's talking about places like Brisbane, Perth and Adelaide where that's really pushing up. That the upper quartile is also moving, whereas in Melbourne, that is not happening and it is still declining in quite a few suburbs. Right, so what is the median value for Melbourne, Sky?
So the median value now sits at 830,000, which again, as I said, it's the third most affordable. It's still actually not back to its peak. So its peak was back in March 2022. It's still 0.7% below that. So I think it's the only one that's maybe Sydney's the same, but it's the only one still below that peak. So again, definitely room to grow just to get to where it was. But again, we've got a long runway in terms of that capital growth cycle.
Yeah, so just looking at some of the other capital cities and where Melbourne sits relative to that. So, as you said, the third most affordable. We've got Sydney at the top of the list at 1.29 million. And at the bottom of the list, we've got Darwin at 602,000 as median value. Probably another thing to note as well is that the median value is for dwellings, so it's combined houses and units. So when we break it down further to the median value for houses, that's going to look different as well. So we'll get to that shortly.
Probably a good time to jump out of the Cotality report and just to mention something that I did mention earlier at the start or in some other episodes as well, and that's about how the median's calculated. And so when you're calculating the median, it's basically you line up all the property sales that you have and you take the middle one. Whether you have 10 properties, it's between the fifth and sixth when you line them up from cheapest to most expensive. What we've seen in a number of other locations and what we definitely saw in Perth when we were buying in Perth a few years ago was when you go in there and you look at the data, you can see it on the ground, property prices are rising 10, 15%, if not more in 12-month period. But in the data, it was moving 0.1% a month. And you could just be like, this does not make any sense. And then you unpack the median, and it's because how Perth started its most recent boom was all in that sub 600K price point. So there were lots and lots and lots of transactions in that kind of 450, even 350 price point. And so what that was doing was that because there were more sales to that lower end, it was actually dragging down the median. So when it was calculated, there wasn't a lot happening at the top end of the market, but there's a lot happening in the bottom end. So the median price actually gets kind of stuck, if that makes sense. And so it's been interesting to draw what we've seen happening in Perth to what we're seeing in Melbourne. And so what I did is I went and found the top 20 suburbs by sales volume because I know these are sometimes more inaccurately quoted as the most in-demand suburbs, which is definitely not the case. But I just want to break down a few of these for you just to give you an example of what's happening at the bottom end of the market and why I think it's dragging down the Melbourne median a little bit. So you can see here the number one suburb in terms of sales volume is Melbourne CBD. And that's all units, and it's 2,214 sales. So that in the 12-month period. So again, that is potentially sub 500K, like some of that stuff was selling at 300,000. So when you have all these transactions weighing down the median, that's obviously one of the areas. Tarneet and Clyde North and Truganina, some of the suburbs that if you listen to us on socials, you hear me talk about a lot, but they're all house and land packages. So again, we're talking about land at the far fringes of the city and cheaper houses, the newer builds. They're not necessarily cheap, every single one, but by sales volume, they are. And let's talk, say, sub $800,000. Again, that's kind of weighing down on that median. So places like Point Cook as well, Werribee, Wollert up north, these are the ones doing lots of volume. And Docklands, it makes the list as well, which again, we're talking about units, which again, they're pretty cheap units. And again, they're not
a lot of supply.
A lot of supply. So it's not in demand, it's lots of supply. And because there's a lot more in these suburbs that aren't even selling. So we see those kind of numbers weigh down that median a little bit in Melbourne.
I'm just going to quickly touch on the gross yield across capital cities because for a lot of investors, cash flow and yield is important. We often talk about how the yield in Melbourne is not fantastic, but it's actually not the worst, according to Cotality's most recent report. So Melbourne, the gross yield is sitting at 3.6%, which is not too bad. Sydney's down at 3%, so Sydney is the lowest on the list. Brisbane at 3.4 and Adelaide at 3.5. Highest on the list is, no surprise, Darwin at 6%.
Yeah, and it's been funny to watch over time because Melbourne's always been that kind of, underperformer when it comes to yield. But when you're talking places like Perth 3.8, Adelaide 3.5, Brisbane 3.4, Melbourne at 3.6 starts to become more attractive.
Sure does.
And we saw this probably 12 months ago when we started buying in, say, Frankston and surrounds, when we're getting above 4, approaching 5 in some cases. That doesn't exist anymore. But again, because prices have risen in those pockets, we're into that kind of maybe high 3s, low 4s.
That yield compression.
Exactly, yield compression. Prices have risen, rents have risen a little bit, but they haven't kept up with the growth. But to say that, Brisbane and Perth are now almost on par with Melbourne when it comes to yield, it's probably new information, I guess, to a lot of listeners because it's always been 4 or 5% in some of those locations.
Before we continue, just a short note from our sponsor.
Property is a powerful way to build wealth, But knowing what to buy, where to buy, and when to act is where most people get stuck. If you're planning your next property move and want clarity, book a complimentary call with Sky Hammer from Convergence Buyers Agents. Sky works one-on-one with his clients using a data-driven approach and on-the-ground insights. He takes the guesswork out of buying and aligns every purchase with your broader strategy. And as a former diplomat, Sky knows how to negotiate confidently and get results. You're never left wondering if you overpaid or bought the wrong asset. To book your complimentary call, visit convergencebuyeragents.com.au or click the link in the show notes.
We might now move on to the top SA3s in Melbourne that have had growth over the last 12 months. So for those that are listening, an SA3 sometimes aligns with a local government area, so an LGA, but it doesn't always necessarily align. So it's a grouping that the ABS, the Australian Bureau of Statistics, uses to sort of group together functional suburbs into one demographic area.
Let's work through the list. We won't go through all top 10, but there's a few, I guess, that we're going to expect to be on there, and there's a few that have dropped off the list, which we'll talk about in a little bit as well. But coming at number one is Frankston and the surrounding areas. It's up 14.3% over the last 12 months. So
no surprises there.
No surprises for any long-term listeners. We've bought almost, I'd say, at least 80% of our property for Melbourne investor clients in that area. So it's great to see that obviously reflected in the data, which is what we're seeing on the ground and in our, I guess, valuations that we're getting done at the moment as well.
Very good. And that's followed by Brimbank with 10% growth and Kingston with 8.8% growth. Kingston's actually a market that we are doing a lot more in this year as well. So we've got a lot of clients sort of pushing into that higher price point, like that 1 to 1.5 million, and buying in those suburbs that are, I guess, considered slightly more blue chip locations, particularly for SMSF purchases.
Yep. Yeah, definitely. Yeah, I think probably an area you can more us talk about more through the rest of this year.
Yeah, it's so for those that don't know, Kingston is southeastern sort of Bayside suburbs. So things like Mordialloc, Chelsea, they're all in that Kingston LGA.
Working through the list, we have Whitehorse, which is kind of at the outer east. It was up 8.6%, and Sunbury up in the northwest at 8.5%. And then also at 8.5, we've got Dandenong as well. So again, not our preferred market, but still one that I think's got a lot of growth. There's a few more on there. Tullamarine, Keilor, Whittlesea and Knox would be the other ones around at the top 10. The two that I want to talk about is Cardinia, which has kind of dropped off the list. That's kind of a market we have been active in. So it's interesting to see that one, what's happening there. And we're going to unpack that in a future episode. But the other one is Melton Bacchus Marsh. And this is it's a huge outlier when you look at data, what we've spoken about, the kind of lower quartile actually outperforming pretty much everywhere across the country. It is the lowest. So you got Bacchus Marsh, which is in that 670, 700K range. Melton West, Melton North and South and every other direction.
All of the Meltons.
Yeah, all of the Meltons. They should, if you compare that area with basically any other affordable lowest quartile across capital cities, it should be number one, and by some way. That's what we're seeing across the board in other locations, that lower quartile moving the market. It's not happening. And we picked up on that quite early, and we haven't bought a single property in Melton and surrounds. We have clients that other BAs have bought for them there, and then they've come to us since. Maybe they've started to speak about that area. And I've mentioned horror stories in the past with not clients, but developers and clients or people I've spoken to who've bought 2, 3, 4 properties in those suburbs. One example I think I've mentioned on the podcast before was a guy who went out and bought 3 properties in Melton and surrounds within a 6-month period, about 18 months ago. All 3 of those properties right now, tenants aren't paying rent. 2 of them are being trashed, and all 3 of them are before VCAT. So again, affordable, yes. Yields look good, yes. Are they great investments? Probably not. And right now is when they should be experiencing the most capital growth they probably ever will, and it's just not happening. So just another kind of word of caution for people looking at that area. It's cheap, it's affordable, but to be honest, I'd much rather move into kind of regional Victoria than buying into a market like that.
Yeah, so Melton was on the top 10 for SA3 regions for growth in December, just at the bottom. So I think number 9, but that's now dropped off. They're not on the top 10 at all for January, and probably going to continue in that direction as well.
Exactly. Yeah, because we've seen that affordability drive the market, and that's kind of, you can already see it's starting to drop off.
So I guess looking forward, Sky, are there any other things sort of that Cotality was able to draw upon in terms of what's happening in the broader market at the moment and what's influencing property prices?
Yeah, so if you haven't already, go download the report, the Cotality, the Home Value Index report, the HVI. They do it every month. If you download it once, you'll get the notification or the email every time it comes out. But because they obviously break down the data, but they talk about the macro, what's happening, what they think is influencing property prices. A lot of the time it's relevant, and sometimes you can see that they've just kind of had to put something in there, I feel like, and it's the same message that's slightly tweaked each month. But the two big ones, now obviously we're recording this on the 2nd of February, so tomorrow is when the RBA meets. I'm expecting rate rise to occur. I think just about everyone is at this point, given where inflation's heading over the last few months. So the rate rise is a big one. So what do we expect to happen? Again, Cotality said that could be a dampener on the market, and this is not just Melbourne, this is obviously everywhere. That's the big one. Personally, and then the markets we're buying in, I'm not expecting to have too much of an impact. So I think will happen the most is homeowners, particularly buying in that kind of $1 million market, they're just going to get pushed down again. So borrowing capacity will come down a little bit, and then they're being pushed down into that 800-900K range, which again is just kind of filled with homeowners, investors, downsizers, kind of everyone at the moment. So I think it's just going to continue to heat up with that 5% deposit scheme obviously contributing to that. So that's where I think will happen. It might put off some investors buying another property. So I've had some interesting feedback from both clients, but also potential clients who maybe were about to sign up and then they saw the inflation numbers and thought, oh, I'm going to have to hold off because it's going to be either cost too much to hold, the bottom is going to fall out of the property market, all this kind of stuff. So we actually ran the numbers for them. So on average loan of $600,000, the interest repayments are an extra $3,000. But the markets we're buying in, that's over a 12-month period. In the markets we're buying in though, when we're talking about potential 15% capital growth over 12 months, and we're talking 100,000 plus, that $3,000 holding cost is almost a non-factor, I would say.
There's that opportunity cost for sure. If you're not going to buy, you're missing out on that capital growth, and at the cost of $3,000 for the holding costs increase.
Yeah,
it's worth it.
Exactly. Yeah. So we've kind of had a couple of those conversations, not nearly as many as we did previously before the last kind of interest rate rising cycle. But yeah, it's starting to hit the mindset of a few people, which is exactly what the RBA wants it to do. It wants people to kind of take a little chill pill, stop buying stuff, stop buying property. So we'll see what happens there. But that was the first one that they spoke about, was the interest rates. The second one, though, which is the flip side, is supply. And supply is still horrific across the board. So although they might dampen demand with this, interest rate rise, there's just still no supply. And that's the bottom of the market, not so much the top end, but even in the middle. Like if you... we do the heat mapping exercise for our clients in strategy sessions. And sometimes I'd like to compare markets. So I'll show you days on market, supply, and a few other things, say for Perth. And everything's either dark green or dark red, depending on what the number is. And I was like, this is a booming city. When if you look at Melbourne, on the supply side, it's actually very similar to somewhere like Perth. Like if you map out supply, stock on market percentages, that type of thing, it's actually really tight. So there's not a lot of supply getting around. What it's missing compared to somewhere like Perth or Brisbane is the overwhelming demand across the whole city. That's not there. So supply side, I think, is going to remain the same for some time. So I think regardless of interest rate rises, there's still people on the 5% deposit scheme. There's still cashed up investors. There's still downsizers who, again, all cashed up and then paying in cash, literally. So again, I don't think it's going to change when the supply environment is so tight. Now, how does that change? Well, it could be that there's multiple interest rate rises. Investors, I think in particular, might look to sell off some stock. So they might have an investment property that's huge maintenance bills, or it's done its job in the portfolio. It's grown 200,000, 300,000, 400,000, and then it's just annoying to hold in terms of interest repayments. They might sell some of that stock, but I don't see it's going to be a massive kind of, again, stuff like the mortgage rate cliff and all this other stuff that was spoken about that never materialised. I still don't see any kind of overwhelming change to supply.
So I do want to touch on the types of properties that we are seeing demand for, and that generally tends to be family homes. So 3 to 4 bedroom freestanding houses on larger size blocks of land and turnkey, so ready to move in, no works required. So they are going to continue to have demand and attract buyers for sure.
Yeah, and they're the types of markets that you see, they nearly always go to market. Like we obviously do a lot in the off-market space, and we much prefer the ugly ducklings or the ones where there's a distressed reason for sale potentially, whereas those ones, owner-occupier, hit the market, selling at a significant premium. For us, we would much rather buy something that needs 15 grand worth of work. But then when we do that, we're uplifting the property by 70, 80 grand, and it looks like the end product that we're seeing listed online. So we much prefer to get into that space before they look like that property. But again, as you said, like anything that's transacting online with lots of owner-occupier appeal, and like particularly in the southeastern suburbs of Melbourne, sub 950, still flooded with inquiry, the real estate agents are, and also just so many people at inspections, like still massive lines out the door. Not so much the first few weeks of January, it was still quiet, people were on leave, and there weren't, to be honest, that many good quality properties. But post-Australia Day now, the new listings are all starting to come out, and there's some really good stock getting around.
All right. What other sort of updates do we have around Australia for property headlines? Are there any schemes or initiatives that you're turning your attention to, Sky?
I wouldn't say turning your attention, but like it's just the 5% deposit scheme. Like we hear about it, like we are helping some people with that, but more often than not, it's an investor saying, "Hey, I want to get ahead of it." I'd say now you can't get ahead of it. Like it's here, it's happening.
We're already starting to see.
I think it's 20-something thousand people have already got signed up to the scheme now. So it's happening. That demand's happening across the country. The other one would be the renter versus buyer discussion. So I had a chat with Herald Sun last week, was it? I think it was. They put an article out on that conversation about the cost to rent versus the cost to own a property. And in some locations, CBD locations, I guess Docklands and a few others in Melbourne, it almost makes sense now to own because the repayments are cheaper than renting. Would I go out and do that? No, but there is a conversation to be had around that. So if some people are beginning to do that, if they got the deposit, particularly now with the 5% deposit scheme, if you're buying a new apartment again, it can be stamp duty free. So it does make sense for some people. But for us, and putting the investor hat on, which you don't have to if it's obviously to live in, it's still not something we would be doing. But I can see the appeal.
Generally prefer to go down the path of rent vesting.
Yep.
For a lot of people that are sort of looking in these locations where it's cheaper to buy than to rent, it's generally apartments, and that's not sort of our preferred strategy. For the same price, you can buy in some locations, regional locations generally, and at least have that capital growth on a freestanding house.
Yeah, yep. And I think we should caveat that by saying that I actually do think Melbourne units are going to grow this year. I think there is going to be some growth. Again, and this is the question was put to me, like, where would you buy? What would you buy? And if I had a choice and I'm still on a restricted budget, I'd be looking for like an older style block, like no pool, no gym, no elevators.
Only 6 apartments.
Yeah, 6 to 8 apartments in somewhere like Hawthorne, that kind of inner east type location, those older style apartments. I was going to say great. Potentially good investments. It's probably more how I describe it. You're going to get growth over this year. We're seeing a bit more as well. I was actually speaking to another buyer's agent who's been buying a lot of apartments in like Elstonwick and other places like that where it's in that 250, 300K range. So again, there is a way to get in there, particularly if you're buying an old one, go in, update it, generate equity that way. There is a play there and there's money to be made and there is a case to be made for it. It's not our specialty, but it's definitely, I guess, achievable for some people if they're looking down that way.
The other thing I've noticed is that rents across Melbourne, whilst they're at record highs at the moment, the growth, so the pace of the rental growth is starting to plateau a bit.
Yeah, it's the rents pace is slowing down. So I think if anything, it's probably better news for the tenants that are struggling to get in for some time. Like I think it's still high, but I mean, at least they're not growing double digits every year still. Yeah.
It is interesting that Melbourne's rents are at record highs when you speak to people that live in Sydney or elsewhere and they look at the rent in Melbourne and they're like, that is so cheap, that is so affordable. But we just haven't had that increase over the last few years to go by. It's now there. Yeah.
And that's a wrap for the January Melbourne property market update. So again, we covered some data today. We covered the highest performing SA3 regions. We covered a few other little things as well, apartments versus houses, all that type of stuff. So hopefully there was enough information there for you today. If you've got any questions, as always, feel free to reach out via socials, via email, however you want to, and look forward to chatting again soon. That's a wrap for this episode of the Melbourne Property Podcast.
If you loved it, hit subscribe and never miss your weekly dose of Melbourne Property Chat.
Please remember this information is general in nature and should not be considered financial advice. If you'd like a more in-depth conversation, book in a call with the Convergence Buyers Agents team and we'll have that conversation with you. The link is in the show notes.
Catch you next time and happy house hunting.